Life moves fast, and so does your career. You've built a successful path, but now it's time to diversify your investments and secure your financial future. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you're time-starved with a family to care for and a demanding career to navigate, not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. At The Prestige, we specialize in serving professionals like you who seek safe and secure investments without the burden of becoming an expert in commercial real estate. With over 400 years of combined experience, our team of seasoned experts is here to guide you towards high return, high yield investments in a low yield market. We meticulously analyze market trends, assess potential risks, and identify lucrative opportunities, ensuring your investment portfolio is optimized for growth and stability. Here's a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting, and love the floor plans. We've got our distribution pending in our bank account. Thank you so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't let time constraints hold you back from maximizing your investments. Visit The Prestige at mayhill.com today for our current and rare investment opportunity, and let us leverage our expertise to secure your future. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your partner in commercial real estate investing.
We are building 400 Class A++ multifamily units in the heart of Dallas. Rents went up in Dallas over the last year 6%, and rents went up in our area 11%, almost double. So we're just going to share this with you. Why would you take your lunchtime and spend it with us to learn about a way to diversify? To learn about a way to diversify. So I am an engineer. I have been an engineer. I have 20 years of commercial real estate experience, and I can do accounting at a CPA level. So there is a strong skill set there to lead and work the project hands-on. $15 million is our current valuation for our property, and our investors are collateralized by the property. So you actually get collateral in the property LLC. Nobody does that. So that right there is a no-brainer. Our team has 400 years of combined construction and commercial real estate. We've actually raised $9 million in private capital. I need to update this slide. It looks like we've raised $2 million since we have used this slide before. So my first property, it was a small property. I did it on my own, 16 doors, forced 80% vacancy. I rehabbed it, re-tenanted, and I doubled the property value in the first year, just like we did on this one, just like our projects that we do. We double the property value in the first year for our investors. I'm Quest Trust IRA verified and vetted. I've taught several classes for their investors. And I also speak and teach for registered investment advisors, broker dealers, family law offices all over the country. Speaking in Dallas on the 29th. We're in Scottsdale in March, and looking at other opportunities to share how to do commercial real estate due diligence, because that's our scope. You're not investing today. Today's not a day to pull out your wallet, so we can put that away. But we're doing commercial real estate due diligence, and that's the cadence of these calls that we have on Zoom is commercial due diligence and helping you to ask those tough questions. So what is your why? This is worth spending a little bit of time. Do you want to shelter and protect your discretionary funds? You need to diversify. Are there third parties coming into your JOB, and the writing is on the wall. Well, that was one of my reasons for starting 20 years ago, is we had a lot of third parties coming into the IT and engineering industry. And I knew the writing was on the wall. While I had a solid career built, I wasn't just going to skip out and do real estate. No, I transitioned. And now 20 years later, we actually have a lot of IT folks and engineers who have come in and invested with us, and we can totally relate. So it's a great handshake there. Do you want to set a goal of replacing your income in passive cash flow, or doubling your income in passive cash flow? Mr. Davis, what do you think? What's a good reason why for our folks to think about and really spend a little time looking at this morning?
Based on my assessment, right, I think there was a lot of people that's still working W-2 jobs that they would like to actually get out of.
Mm-hmm.
They're looking for ways to invest, their money, and they have it tied up into 401k plans. And if they invest in real estate, they actually have a hard asset they can actually invest their money against there. And that can help them, free up their time where they can actually spend more time with their spouse, with their family there. And then they also can diversify their income, right? And not have it just tied up into a 401k plan, and have it tied up into a hard asset where they have collateral in the deal there, and where they're getting weekly monthly, quarterly distributions actually coming out to them based on just their money sitting in their 401k plan, until they become to that point where they're 59 and a half and they can retire and start withdrawing without a penalty there.
That's right. And commercial real estate is half as risky as the stock market and twice as profitable as the stock market. If a 401k is in the stock market, that's pretty volatile, right?
Yes, it is.
Do we have any control over that?
No, you don't pretty much have any control over it. You have the ability to actually decide which investments you're going to invest in, right? But you don't have a lot of control over it. And you're not talking to the people that's actually making those investments for you there.
That's right. That's a good point. So most people want to shelter and protect and grow their funds. That's the bottom line there. So we have different topics that are available on our YouTube channel, prestigeyoutube.com. We have over 100 videos, talks about the property, talks about the market, and also commercial real estate due diligence. So we're going to flip through a couple of these slides, and if you want to get a copy of the deck, just reach out and let us know. You can reach out at zoomingwithprestige.com, make an appointment with the owner. So here's a picture of our website. It's prestigeyoutube.com if you'd like to subscribe. It's no charge, but we have a lot of good material. We have a new video that talks about the location. This is almost a 17-minute video where we're driving around showing you, if you're out of town, how to evaluate this area that we're working in. And again, rents rose in Dallas 6% over the last year, and rents rose in our area 11% in the last year. Dallas is number one in terms of multifamily construction in the nation. Popped back first after the pandemic, Dallas did, in February 2021. And we're working on an asset that is recession-proof. Like our property 22 North in Austin. You can see that second video here. That is a lengthy video, and it talks a lot about our Austin property, which is also Class A plus multifamily, that 30-something tenant type, growing their career, the professional. They just paid rent through the recession. So it was a great indicator and stress test of our property type. We're sticking with that with our Dallas property as well. So feel free to like and subscribe today. So let's get through it. If you are a high net worth individual or ultra high net worth individual, even working with an advisor, that's That's great. You know why? Because you're stable, you're solidified in your career. But let's look at diversifying. We're paying a lot in taxes, we're putting a lot of hours in, and we're living a high income lifestyle with high expenses. If you're investing with vehicles like stocks, bonds, CDs, they are not going to outpace inflation. You'll have to work another 10 or 20 more years to maintain that lifestyle. So here's our team. We're going to talk about the folks that you are seeing on the stage here. I have 20 years of commercial real estate, and I'm the lead developer and owner. So my day looks like working with the general contractor, working with the architect, working with development services, working on that building plan, structural, mechanical engineering, plumbing engineers, and working with the general contractor. That's what I did this morning with our team. We're not syndicators, we're actually owners in the property. And it makes a big difference when you are talking to somebody who owns the property. So because we started with the dirt, there is more profitability. So we can share that. We are sharing that. And because it's a Class A++, there's more profitability. And you can see when you talk to our Investor Champions Club how those returns are coming back to you, along with the collateral. You're collateralized against the equity in the property. So, God forbid I go to heaven early. What does that day look like? The investors recoup their investment based on the equity in the property, and they get their pro rata share from the sale of the property. It's a good day. So let's move ahead. We have Mr. Davis, who is on the line as well, Mr. Divip Davis. And why don't you give us a rundown of your background?
Denver Davis there. So I have about 10 plus years there in residential real estate there, and I have about 2+ years in commercial investments there. So I have investments currently in Prestige there. So I'm actually one of the partners in Prestige there, and I have came into the deal actually 6 times there, and I have came into a special program that we currently have right now called the DRIP campaign, which I can discuss that later in the background. And I also have investments in other multifamily deals in actually triple net leases there. And you will be the person that I actually talk to if you call the Investor Relation Club. And I usually set up 2 or 3 meetings with you there and get to meet you, and you get to meet me. And I walk you through the process there, and I'll help you to understand the YouTube videos. And then we'll also discuss the deal room, and if you have any questions there. But I'm counting in your shoes, right, as looking at the investment from becoming a partner, right, which I am a partner in the deal there, and I can give you my perspective when investing in Prestige there.
Well, that's fantastic. We're super excited to have you working with us now. And because of your skill set, you're a great family man. You are also a believer, and there's a lot of trust in being able to trust what you're saying is true. And there's a lot of experience there. Talk about some of the process. I like how you talked about the process of being able to actually have a couple meetings with you to do their due diligence versus another syndication where it's here's a little bit of information and make a decision.
Yeah, so the way that the process normally works, right? The first call that's scheduled, right? The first call is kind of like a meet and greet call where I get to know you, you get to know me, and we discuss back and forth, right? And we kind of just make sure that we're a good fit for each other there. And then we will go from there. We'll start discussing, pretty much the baseline of the deal itself there. Why Prestige is actually a good deal that deal is discussing today. And then from that first meeting, right, I normally will put the person into the YouTube videos where you can review the YouTube videos there. Once you review the YouTube videos there, we normally schedule a call from a call there. So once we get off that first call, we'll already be on schedule the next call there from that point in time there. And on that second call there, we'll kind of get into the YouTube video discussing there. And then if you're still interested in the deal there, you'll have an opportunity to actually be shared our deal room link where you can go into our deal room and you'll actually be able to see all of the due diligence documents that we've been working on for the last couple of years there. And normally based on that last 2 or 3 calls there, normally that's when the partners decide whether they want to take into invest in the deal there. So it's normally like a week and a half to a 3-week process. It's not normally like you'll see other syndications where you'll get to see a presentation that's normally 25 slides and then you get to invest in the deal. So we're normally trying to build a relationship with the potential partners that's coming in so we can build a long-term relationship and go from this deal to another deal.
Absolutely. And how much documentation is available to look at in the deal room? 1 or 2 documents, or what's in there?
If you go into there, you have our appraisal that's actually in there. You actually have our waterfall that's actually in there, our PPM agreement. You have the feasibility studies in there. You have the environmental package that's in there. You have our permits in there from our city there. You can actually see the owners of Prestige from the city there. It also give you the highlights of our financial information. The reason for, from a risk standpoint, right, it actually lists out the risks when it comes to actually investing in our deal there. There's a lot of information there. It probably, if you go through all of the information, it probably can take you up to a week to actually go through all of the information there. But it's enough information in there for you coming on as a partner, right, where you can make an assessment whether this is something that you want to invest in or not there. So you don't have to be looking at a presentation and making that assessment. You can make the assessment from the same documents that we're looking at as being owners ourselves.
Probably too much documentation in there, but I feel like transparency is important, and having the opportunity, if they want to go through the documentation, that's key. So we have a couple of appraisals, we have the studies, we have city approvals, we have the parcel numbers, so you can look it up on the CAD website and know that it's real property. You can see who owns the property on the CAD website. You can do a complete and thorough due diligence based on what is in the deal room. And if it's too much, that's okay. Stop reading. But I just feel as an engineer and as a fiduciary that we need to provide that level of transparency. You also are seeing on our meeting today our manager of accounting and finance, our director of accounting and finance as well. So we have Stacy Tucker, who is also a partner in the deal with her family and has real estate experience. Stacy, what do you see about the Prestige that is different from a lot of the syndications that people are seeing these deals roll through their desk?
First of all, I really like the transparency that we have. You say there's a lot of documents in that deal room, but I like the fact that we can read just about everything. And I do like the fact that you're collateralized in the property. So if something does happen, that we are made whole. So it's a safer investment. That's why me and my family invest in it. And one of the main reasons I like it.
And that collateral comes in the form of a subscription agreement and private placement memorandum, a Reg D 506C under the SEC. When we're talking about collateral and another syndication, not ours, if you're talking about another syndication, this is what the SEC attorney is telling them. They're instructing them to have your property in the LLC for asset protection, which we do. And then they're putting the investors in a different LLC or LP to have an arm's length away from the investors. And after about 20 minutes of me telling my SEC attorney, hey, I want them inside of the property LLC and I want them collateralized in the property LLC against our equity, finally he said, okay. He wants to protect me, I'm sure, but wouldn't you rather be collateralized by the asset that has $10 million, $11 million in equity in it? So we are putting our investor partners in the property LLC itself. You're collateralized and you're safe and secure that way. Now, that's just one of the risk mitigation points that we have put in place to protect the investor, and I've done that as a fiduciary. We have our investor club champions here. We've got Ed, we've got Andreas, we have Rochelle. They're talking to folks, helping to set their appointments, answering questions, and being available. So why multifamily? As we wrap it up, I'm going to talk about this asset type. There is one version of doing commercial real estate that is multifamily, that is Class C conversion. And that is a popular one because a lot of the syndicators are doing it. A lot of the gurus are teaching it, but there's very little margin in doing a Class C conversion to a Class B. And then the rents are flat. Because if you think about that tenant type, they're not going to drive more than 5 or 10 miles to get to work. But with our Class A++ tenant type, that 30-something professional, they will drive, of course, 30 miles to get to work. Now, our property, our Class A multifamily, is in the middle of Dallas, and they can drive to Plano, 30 miles to Plano to get to work. They can also drive to Grapevine and South Lake, 30 miles, and they can hop on the light rail and go down to downtown Dallas. It's revitalized downtown Dallas. So multifamily, we have to distinguish what kind of multifamily. Does it have small profit margins? Does it have a loan on it that has a balloon payment on it? That's why those deals are getting in trouble, where we started with the dirt. We doubled the property value in a year with our entitlements, and now we're getting our permit, final plat, and within a couple months we'll be laying those utilities and putting the horizontals in. So we've de-risked the property with risk mitigation. Why Texas? Well, no state income tax, that's great, but also we've got one of the best markets in the country for construction. Number one in multifamily construction. Dallas is number one, and then Dallas is number two for all kinds of construction in the nation because our guys can work all year. We've got our rents that are incredible. We have professional wages that are higher than Austin or Houston. So we've got the economy. Corporations are moving their regional and corporate offices to Dallas. Wells Fargo is coming to Dallas. The PGA has come to Dallas. Lots of that good information available when you get back with our Investor Club champions and book a Zoom meeting or a 15-minute discovery call if you want to do that. We have good information on Dallas as a submarket, Dallas as a market, and Denton as a submarket. And we are ranked very high across the nation. Now, when the pandemic hit, everything stopped and all the traffic, there was nobody on the road, right? Well, we were first in the nation to get our traffic jams back, and our restaurants were full. Those are key indicators for a booming economy. I was speaking in Florida at the time that everyone from all across the nation and from Canada was saying, oh, our restaurants are so slow, our malls are so slow, and Dallas had already popped back out of all of that. So we're looking at recession proof. Here's one indicator of being in the right market and what's happened since that. Not only a rebound, but growth upon growth and rents that continue to grow in the Class A++ multifamily. So we want you to do your due diligence. We want you to ask the hard questions. I like this question. Ask the person, are you now or have you ever been in any deal where you've lost investor money? Wouldn't you want to know that? I can say, no, not in 20 years. Here's another great tough question we want you guys to be asking. Have you ever filed bankruptcy? Wouldn't you want to know that if you're investing with somebody? Well, no, I couldn't be signing on these big loans as a developer if I've filed for bankruptcy. That's a preclusion. So we want you to ask your due diligence questions of everyone. We know you have deals going through your desk, and we're just here to help you do the due diligence, some risk mitigation. The cap rate was evaluated at a 5 cap for a Class A++. Well, that's too high. That's going to undervalue the property because it's actually a 3.5 cap, 3.5 maybe 4. So we are putting that risk mitigation in to make sure that everybody has a safe and secure investment. Dinvip, can you talk a little bit about some of the risk mitigation that you have seen to protect everybody involved?
Yeah, if you look at the risk mitigation, right, that I've seen, right, for us looking at the underwriting itself, right, so the cap rate for A+ apartment really should be about 3.5, but we're using cap rate that's actually higher than that. Then the vacancy rate that we're using, right, is not the standard for Dallas area, which Dallas vacancy rate is normally around 97%. So we're actually using a lower vacancy rate when it comes to the actual vacancy rate there. So those are two things that's pretty standard that sticks out to me when it comes to looking at the risk mitigation on the project here itself there in the underwriting.
Yeah, that's right. And Dallas vacancy rate is about 1 or 2% is what I've seen over 20 years, maybe 3%. And we've used 7% in our valuation because we're using the bank required vacancy rate. So we've put in risk mitigation in there. Our operating expenses are high enough, so we're not overvaluing our property. We have risk mitigation upon risk mitigation because we want to value our property correctly. So when the economy is doing whatever it's doing, we're still okay. We like to use as an inflation rate, we like to use 3%, but with all of the inflation that we've had lately, we're not putting in 6 or 8 or 20%, we're putting it in 5% inflation rate. So we're watching the market and making sure that we are safe. As we finish, here is track record for you. So here is our 22 North apartments in Austin. And we have a short video at prestigeyoutube.com that, well, actually is the lengthy video, but it does an aerial. We walk the property a few times and we talk about some of those methodologies that we're putting in place to attract a 30-something tenant type. And our tenants will actually stay 5 or 6 years. They don't move out every year. So that saves expenses on those turns. People stay longer if you allow them to have pets. So that is what we're doing too with the pet park. It's a gorgeous asset, 240 units built on 14 acres in 2018, and it sold for a profit of $22 million. Compare that to our Denton property. We are kicking off 226 units, and we will build a phase 2 and 3, bringing it up to 400 units. It's a great return because of bringing it from dirt into fruition, and also because of the Class A++ asset type, the 30-something professional building their career. They're just paying the rent. We're not getting stuck in some rent moratorium. They're just paying the rent like they did during the recession. It was a great stress test. Your time and money are valuable, and a good sponsor should respect both. So we have a checklist. We have a due diligence checklist that we're happy to give to you on this call. We're happy to send it to you or the deck so you can vet potential sponsors and you can protect your investment. We looked at 22 North. It's a tangible result. We've got a couple different ways that you can participate if you're interested. Dinvip, can you help us go over this and see what our options are if we're continuing our due diligence with a focus on potentially partnering?
Yeah, so our first option, right, that we have, which is point 2 there, right? We have this 52-week drip contribution program that we just started.
Yep.
And basically what happens there is that you can do a minimum investment of $50K there, and then you can make a monthly investment through when we send you our wiring instructions and you make your investment over 12 months there and you do it each month there, and you're still eligible to get your quarterly distributions there based on the prorated when you actually submitted those distributions there. So that's a good way to actually get into, Prestige. That's a new deal that we have for us, the drip contribution program there. And then you still get the quarterly newsletter, you get the PPM agreement. It's all set up just like the standard investment that you would actually do if you made that single investment of 100K or 200K there. You still get up to 3x returns there on that investment.
So for accredited investors, we're talking about a drip contribution that they could work with their HR department and have it taken out of their check, just like any other fiduciary contribution, or they can set up a recurring contribution out of their bank account. So we've got a couple of good ways. This is very creative, and it helps people who are accredited investors to be able to use their high income and start to diversify over a drip period of 52 weeks or monthly, right? If we make a investment of monthly, then they get their quarterly investment. So that is brand new. Folks with 401k, folks with IRA. We work with about a dozen custodians to help people to put their investment vehicle to work. We do work with them. And as we wrap it up, I just want to tell you, thanks for taking the time out. I have a one-page takeaway that you can access, and it talks about how to do commercial real estate. We want you to be asking the hard questions in order to do your due diligence and protect yourself in this kind of iffy market. We want you to thoroughly check things out, and we're going to take the time to let you do that. We're not asking for any kind of a decision today, but we have the opportunity to spend time with our team, get to know us. I'm going to flip this over to the deal room quickly just to show you how much information is in there. This is our sister property, 22 North, and this is our location. So you can go through all of the graphics that are actuals from 22 North that we're implementing the same methodology. We've got construction costs, we've got highlights about the submarket, and then we have documents that you can pull and you can check out the property thoroughly. We have a deep dive available. We have our website with our team. We've got those 100 plus videos, personal information on the Denton CAD. So you want to look at who is on that property and the deed, then that's available. But look over here, we have all of these studies that have been approved. Everything is available in full transparency. And we have property information as well.
You're not showing anything.
I'm not showing anything. Okay, so that is on me. These are pictures of 22 North, or these are actuals of 22 North, our sister property. The clubhouse, you can go through all of these pictures of 22 North, dog park, beautiful area, common area, floor plans. It's a real simple format where you can see everything on one page, talking about the markets, talking about the submarket, talking about our numbers, risk mitigation. So Mr. Davis talked about risk mitigation, conservative bank underwriting, and we have the deep dive that's available where Mike Carrasco and I really take a good look at the property, but also a good deep dive into what we did on 22 North as a track record. Our website with team, our educational videos, and parcel information over here, all of the reports, the approvals, the civil. And then very quickly, if you want to go to prestigeyoutube.com and subscribe. We have over 100 videos on using your HELOC as an investment, home equity line of credit as an investment vehicle. We have using your 401k or your IRA or Roth as an investment vehicle. Of course, cash is okay too, but we will need to see some ID. The location videos where you can, if you're out of town, you can look at this video and you can check out the area. A lengthy video about different parts of 22 North and aerials and still pictures as well. We've got all of this information, and that's free. Over 100 videos on demand. So I just wanted to, as we wrap up, perfect timing. As we wrap up, we wanted to thank you for your time and attendance, and we can add this handout. If you'd like to have a handout of how to do commercial due diligence, it's a checklist. Let's get that over in the chat. I can share that now and people can download it or get with us at zoomingwithprestige.com, and you can book a meeting with Mr. Davis or any of our Investor Club champions, even if you're an advisor, broker dealer, family office, registered investment advisor, you're an ultra high net worth individual. This is a raise for accredited investors at this time. We do have about 3 off-market properties to work on it after our general contractor fully takes over this property and is going into a fund that you can participate in. So thanks for your time today, and we wish you a blessed week, and we will talk to you soon.
After a lifetime of hard work and dedication, it's time to enjoy the fruits of your labor. As you enter into retirement, securing your nest egg and preserving your financial future becomes paramount. Not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you seek less risk, financial security, and a reliable source of income. With over 400 years of combined experience and proven track records, The Prestige is your beacon of trust. We specialize in providing safe and secure investment opportunities tailored to your retirement goals. We know that you need to rely on experts to navigate the complexities of the market. That's why our team of seasoned experts is here to guide you every step of the way. Our collateral contracts have been approved 10 plus times by Quest IRA, which is under the SEC. Here are just a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting. Love the floor plans. We've got our distribution pending in our bank account. Thanks so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't compromise on your retirement dreams. Visit The Prestige at mayhill.com today for our current and rare investment opportunities. And let us utilize our 400 plus years of experience to safeguard your nest egg and provide you with a secure investment in a low yield market. We are owner operators with daily hands-on on-site responsibilities. We are not syndicators. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your trusted partner in commercial real estate investing for retirees.